So we are going to get started here, and I'm sure others will join us during the hour. We have an hour here, and I just want to welcome everyone. Thank you all for attending. So I am Heidi Alexander, the director of the SJC's Standing Committee on Lawyer Wellbeing, and this is a program that that we are putting on. Particularly with our committee members who represent our public agencies. So including, I see District Attorney Marion Ryan, who is here, Bethany Lee from GBLS, Catherine Grubbs from CPCS, and Mary Strother, who's the First Assistant Attorney General. And so we have been putting on programs over the course of the year specifically for our folks working for public agencies and legal services. And so this is another that we understand is very timely. And so this program is all about the Public Service Loan Forgiveness Program and the many changes it has gone through and continues to go through, and in particular, this time-limited waiver opportunity. And we are very lucky to have, and if you wouldn't mind muting yourself, if you've just come in, I would appreciate it, thank you. And we are very lucky to have today two real experts in student loans and debt. We have Ashley Norwood Strupa, who is the Regional Director of Access Lex Center for Education and Financial Capability. And we also have Arwen Thomas, who is the newly appointed State Student Loan Ombudsman for the Massachusetts Attorney General's office. And so you're going to hear from the two of them today, and they are going to go through a presentation at the beginning, and then they will take questions at the end. And they are they have limited the amount of time that they will present because we trust that you will have many questions, and we would ask that you drop your question in the chat, and then we will go through those questions. If we get to a point where we get through all of those questions and can have some hand raising, we can do that as well at the end. But just note that we have a lot of people on this webinar, so we appreciate it if you could just stay muted and use the chat. And then the last thing I just want to note is that this program is being recorded. We've had a lot of requests for this program, and so we will be recording it and providing it to people after this date. And then finally, again, if you can keep yourself muted, that would be appreciated. So with that, I am going to turn it over to Ashley, who is going to kick us off here.
Perfect. Thanks, Heidi. And I'm happy to see everybody on the call today. I know that public service loan forgiveness, and I'm going to try to call it PSLF because it's such a mouthful. PSLF has been a confusing topic since its inception back in 2007. And if you've been confused about it, you are not alone. Highly educated people just like yourself have been confused by it and have had missteps along the way and throughout the years. So don't feel bad about it. Luckily, there has been a recent change which is the limited waiver opportunity. And we're going to talk about that, but I also want to hear just where everybody is. If you could just throw in the chat panel, just so I know, where are you in your journey? Have you been repaying for 10 years already? Are you only 3 years in? Are you 5 years in? Do you have no idea what's going on? So you just joined the chat. I'd just like to see, who's here. So I see 3 years, 6 years, 9 years, 10 years. Not consolidated. Yep. Obviously, 11 years, 9 years, 17, just joining. 20 plus years. Wow. Okay, so we have a wide range of individuals here. Perfect. Had loans since 1990. Okay. So my name is Ashley Norwood Strupa. I've been working with student loan borrowers, and been advocating for student loan reform since 2006. I live right in Revere. I've worked at colleges in the Boston area, and I've worked at nonprofits since 2006. Right now I'm with Access Flex Institute, and they are based out of Westchester, Pennsylvania, but I'm their regional director for the Northeast. So I handle all of New England, Maryland, and New Jersey. Don't ask me why we jump so far down for my region, but we do. And we really advocate for personal financial education for specifically law school students and those in the legal profession. And so public service loan forgiveness is what I like to call my jam. I really love PSLF because I love the opportunity that PSLF provides for individuals, but it has been a confusing road. So originally PSLF was signed into law back in 2007. What it does is it incentivizes individuals who have taken out student loans to go into those needed professions in the public service arena and the nonprofit fields that typically make less than their for-profit counterparts. If you're an attorney and you're working as a public defender, you're likely making a whole lot less than your attorney friends who are working at a big law firm up, at like 33 Arch Street in Boston or something like that. And they're incentivizing you to do that by saying, if you work for a nonprofit organization for 10 years while you're making eligible payments on eligible loans, I notice I keep saying eligible, then you'll have your remaining balance forgiven and it's tax-free. Sounds easy. And of course, it started in 2007. So 10 years later, people started applying for forgiveness, and we had less than 2%, less than 1% who were actually getting approved for forgiveness. So it looked like it was an abysmal failure. Problem was people were in the wrong loan program. People were repaying under the wrong repayment plans. People weren't working for an eligible employer at all. So there was a lot of confusion around the program. So I'm going to just outline the actual original program as it stood before October 6th. October 5th was my birthday, so I remember it very distinctly. It was October 6th, so the last day before we found out about any of this, is that you had to have the right loans. You had to have direct student loans. Prior to 2010, a large majority of the student loan portfolio were in what was called the Federal Family Education Loan Program, FFELP. So for those of us who graduated in the early 2000s, we likely had these types of loans, which were not eligible unless we consolidated. And if you consolidate, it restarts your repayment process again. So you needed to have direct loans. You need to have be repaying under the right repayment plan, which was an income-driven repayment plan. In 2007, 2008, this was a very novel idea. We had the income contingent repayment plan, which is a really old repayment plan. You paid 20% of your discretionary income, and then income-based repayment came around, and then pay-as-you-earn came around, and then new income-based repayment came around, and then revised pay-as-you-earn came around. So we had all these different income-driven repayment plans out there. But all of us that were in repayment in 2007, 8, 9, 10 weren't really educated enough to know to switch into one of these plans. And even those who went into repayment much later than that didn't know that they had to switch over to one of these plans. And when you consolidate, you're automatically placed into what's called a standard plan. But that standard plan could be 15, 20, 25, 30 years long, and it didn't qualify, and you didn't realize it. And there was a lot of bad information coming from the servicers as well when you were asking questions. The next part of this process was the qualifying employer. You need to work for a 501c3 nonprofit. You need to work for a different type of nonprofit that met certain qualifying public services, work for a government organization, any level, federal, state, local, tribal, or you need to be volunteering for the Peace Corps or the AmeriCorps. That sounds pretty easy, right? You should know who your employer is. Problem is that if you are someone who is for example, a private bar advocate or a public defender, and you work for yourself and you just get paid by the state to do that job, you don't actually qualify. You need to get paid you need to have a W-2 at the end of the day. The employer has to consider you an actual employee. And this happens a lot with government contractors, especially. Next is you have to work full-time. Full-time is whatever your employer considers full-time, or with the minimum 30 hours per week. I've had instances where people drop down to 36 hours per week so that to have more of a work-life balance. Their employer doesn't consider them to be full-time anymore, but they thought they were meeting the qualifications of PSLF because they were over 30. So it's very nuanced. You could also cobble together full-time employment with multiple employers as long as they all of them qualify, and you can cobble together that 30 hours per week. You need to make 120 payments. They do not need to be consecutive, but they do need to be made after October 1, 2007. So any payments you made prior to that do not count, because that was when the law took effect. And then paperwork. It wouldn't be a government program if we didn't have paperwork. The paperwork process has improved a little bit over the years. We do have the PSLF form, and you complete that form and you apply for public service loan forgiveness after 10 years. This also created one of the biggest problems, which was if you wait 10 years and then you find out you were on the wrong repayment plan, you can't go back and change it. So we've been advocating for many years that you do this paperwork once a year, and anytime you change employer, so you can keep track of it and you can fix any problems. Now, I mentioned in the news, you probably heard about all the abysmal things about public service loan forgiveness, about how few people have been approved. They then created temporary expanded PSLF, which people still weren't being approved on. And I also have, there's a QR code if you want to look up, if you want to see any of this information in further depth. I'm also going to follow up with Heidi and share some more resources to send out after the presentation. But suffice to say, it's been on 60 Minutes. It's been all over the place. And this program has had a lot of bad publicity, to say the least. Now, during COVID, you were not required to make payments. So as of March 14, 2020, there was a stoppage of payments. Everybody was in an administrative forbearance. You weren't required to make payments. Interest was set to 0%. The Department of Education ensured that anyone during that time working in an eligible organization, that would count for public service loan forgiveness payments, even if you weren't making payments. First time they've done anything like that. But you would still need to have the right loan and have that full-time employment. So again, we have a QR code here so that you can get some further information. So October 6th happens, and the Biden administration announced, and Department of Education announces that they're going to have a temporary limited waiver for PSLF. It ends on October 31st, 2022. It bypasses some of the PSLF rules. And it's actually amazing to think that the HEROES Act of 2003 is what allowed the administration to take advantage of this. So it's because COVID-19 and the pandemic is considered a national emergency. This gave the administration the ability to make these temporary changes. So you have until October 31st, 2022 to take action. So it's a limited time to qualify, even though you might not actually qualify right now, or you didn't under the previous rules, the actual rules of PSLF that will go back into effect on November 1st, 2022. So what does it do? So we talked about the previous requirements. What the waiver changes is that the past payments under any plan count. Any payments that you're making counted. That's never happened before. And then past ineligible loan payments may count toward the 120 payments. You will still need to work full-time. You'll still need to work for an eligible organization, and you'll still need to have direct loans, or you can consolidate into direct loans. Now, I mentioned earlier, if you consolidate, then it restarts the clock. What's amazing is they're saying what they're saying is as long as you consolidate before October 31st, 2022, they are not going to restart the clock. They're going to count those payments that you made to those underlying loans. So anyone who's working for a public organization, a nonprofit organization, should first confirm all of your employment since October 1, 2007. Make sure that you were working for eligible employers, qualified employers. You want to confirm what type of loans you have to see if you need to take an action. And like I said, take that action by October 31st. Keep in mind, anyone here who is a parent and took out a parent plus loan, those are not going to fall into this temporary waiver, this limited waiver. So parent plus loans can qualify for public service loan forgiveness by consolidating them and repaying under income contingent repayment. Unfortunately, in this instance, they are not going to qualify in any way. So which group are you in? I asked a little while ago, where you were in your repayment process. So you might already have direct loans. You might have already submitted your PSLF form, and you may have had some qualify, some not qualify. Those loan payments that didn't qualify before will should count now. You might be a direct loan borrower who's never submitted the PSLF form before, so you're not even sure whether or not your payments counted. And those who have those loans in the older loan program, the FEL program, or a Perkins loan, or certain other federal student loans, you can consolidate and take advantage. Now, I will say, if you want to make sure that it makes the most sense for you. And if you're consolidating, make sure that you have enough payments that you'll qualify for PSLF soon, so that you're not, the name of the game is pay as little as possible. It's not get as much forgiven as possible, because I don't want you to consolidate and then repay for another 20 years. 20 years isn't a good example, but another 10 years because none of the payments you made previously counted. So what we recommend that you do is go on to studentaid.gov. That is the federal student aid site. It's where you can access all of the information about your federal student loans. And we want you to take a look and see what types of loans you have. Do you have any Perkins loans? Do you have any FEL loans? Or do you have direct loans already? Having the facts is the first step of the process. Next, we want you to verify. So you verify the types of loans that you have. And then check to see if you've already completed that PSLF form and have had any eligible payments yet. If you haven't, or you have some unverified payments, you want to submit that PSLF form for any of the direct loans that you already have. So for those who are direct loan borrowers who have never submitted that PSLF form, do so now. You can use the PSLF help tool. It's right there on that student aid site. It walks you through the process. And then for those who have those FEL loans, those Perkins loans, those older loans, you want to verify that you want to be doubly sure that your employment qualifies. So you can use the PSLF help tool. It is a little clunky to use. It lists all the employers that have already had employees have approved payments on PSLF listed there. So it's not an all-encompassing list, but it's a growing list. But you can check with your employer to see if they're a 501c3 nonprofit, that you're a full-time employee. If you're working for the government, you can just verify all of this information and then consolidate. And you're going to do so at the federal student aid site as well. And once you hit the consolidate form, you want to also submit that PSLF form. So do so right at the same time. The consolidation application is right there at federal student aid site. You log in, it's going to automatically populate all of your federal loans. And it's going to walk you through it. When I've gone through it with individuals, it usually takes 10-15 minutes. And in the past, and I was sharing with Arwen and Heidi earlier that I've had a few people that I've worked with say, no, I've been told that if I consolidate, it restarts the process. I don't want to do that. I won't be eligible for PSLF for another 10 years. And the case is that this is the first time they're allowing those underlying payments to count. So make sure you complete that PSLF form for every employer that you had during your employment. So if you've been working since 2007, 2010, and you've had 5 employers, yes, it's a lot of paperwork on your part. I am very sorry, but you need to do those PSLF forms with each employer, and you want to do so as quickly as possible, because not all employers are going to keep their records forever. There are records retention policies in each state, and they are going to, basically it's a risk to keep your social security number on file. And so they don't want to keep your files forever. They might be able to say, yeah, Elise was working for us, but I can't confirm that she was working full-time every month that she was working here. So you want to make sure that you do this as quickly as possible. This is a quick, snapshot of what the PSLF form looks like. It is a fillable PDF, but you will need to print it and have pen to paper signature on there. And you're also going to submit it to your employer again to certify those months that you were working full-time for them. If you're having trouble, this QR code is going to bring you to the complete public PSLF help tool, and it's going to help walk you through that whole process. I mentioned that I'm going to send some information to you after the session. This is going to be one of them. It's our downloadable checklist. And we also have a landing page that we're going to keep updating as we get more information. We have this presentation in a lengthier form, as well as another presentation specifically about re-entering repayment for the first time in almost 2 years. And so we go over the steps that you want to take when thinking about that. And Access Lex, everyone on my team are accredited financial counselors. And so I do want to encourage you to make an appointment with us. We have free coaching appointments, as many as you need. They're over the phone. You can request to do a Zoom one as well if you want to look face-to-face or share screens, and we can walk you through the process. We can answer your questions. And we have people on the West Coast, so we have some evening hours too. So feel free to take a look at that site and that resource, and we will happily help you through all that information. I'm going to leave this slide up. And Heidi, I see that there's a lot popping into the chat panel. So I want to allow Arwen to come back on with me, and we can start answering the many questions I'm sure we're getting.
All right, are you ready for me to launch into the questions?
Please do.
Yes. Okay, wonderful. Ashley, thank you so much for that. So I'm gonna get right in here, and please, if you have additional questions, please feel free to put them in the chat and we'll run through those. So at the top, what about federal loans that are bought privately? And that question has come up a couple of times.
So do you mean by the, like you refinanced your federal loans into a private lender? Or do you mean that it's like the older Federal Family Education Loan Program, which had private lenders backing them? I guess that's my follow-up question to ensure that we're getting the right answer out to you. Because I do want to make it very clear that private loans are not in this conversation. I actually never said that while I was speaking. Private loans are not going to ever qualify for PSLF. It's federal loans that can qualify in this new temporary way.
And one way you can tell if you have a federal loan or a private loan is to log into your studentaid.gov account. It really is sort of a gateway to all information about your truly federal student loans, whether they be FFEL loans, Perkins loans, or direct loans. If you have a student loan that you don't see in your studentaid.gov account, it is a private loan, and it will not be eligible for this waiver or for PSLF in any way.
And I did see that
I'm
people
seeing the clarification.
refinanced.
Yeah.
So refinance loans with private lenders do not count. Once they've been refinanced with a private entity, they can't come back. So I'm very sorry if that's your case.
Okay. Moving on. So it sounds like there's some confusion over the definition of direct loans. And so if you could clarify. that.
Sure. So direct loans are one of the federal loan programs. And, we love the government, we love the Department of Education, but they have changed the name of the federal loan programs multiple times. So there are federal subsidized, unsubsidized Stafford loans. There are federal subsidized, unsubsidized loans. There are direct Stafford loans, and there are direct unsubsidized, subsidized loans. So you want to see that word direct in front of them at some point. So when you go to that the federal student aid site, that studentaid.gov that Armin just mentioned again, you want to look to see what their titles are. If direct is in the name at all, they're direct. If direct is not in the name at all, then they are not direct and would need to be consolidated.
So it appears that there's also some other clarification in terms of the federal loans. Some people are talking about federal loans that have been consolidated and bought privately, still federal, but owned privately. One person has said, initially my federal loans were paid to Sallie Mae, Navient, and then moved to direct loans.
So yeah, you can often consolidate your federal loans into other federal loans, but at the end of the day, a direct loan is absolutely a federal loan, and it is the type of loan that you need to have or to get yourself into if you have a FFEL loan in order to benefit from the waiver. And again, I sort of hate to sound like a broken record, but the key here is to log into that studentaid.gov account where you will be able to see these titles in the, relating to your loans. You can go into your dashboard and you'll see the word direct or FFEL, and you will be able to tell, exactly what types of loans you have. And if you have anything other than a direct loan in that dashboard, you need to consolidate before October 31st of 2022, presuming that you have qualifying employment.
Okay, so moving on to the next question. What is PPLUS for PSLF if consolidated and in ICR?
So I think that's a question about Parent Plus loans. Parent Plus loans, they are eligible for public service loan forgiveness if they are consolidated into a federal consolidation loan, but they are not eligible for these extra benefits under the limited waiver. So while you can take a Parent Plus loan, consolidate it, then repay under income contingent repayment and pursue PSLF, these relaxed requirements under the limited waiver will not be available for your loan.
Okay. All right, I'm just trying to keep up on the questions here. Next question is, so credit, the question is around credit for payments prior to entering the IDR or the correct program. I guess that's not really a question.
So I'm sorry, the question is whether they'll get credit for payments prior to entering.
I think so.
Yeah, so what they're really looking at here under the limited waiver is how long your months have been in an active repayment status while you've had qualifying employment. And so they are going to give you credit for every month that you basically a payment was due on your loan, provided that you weren't in a default or a forbearance or a deferment type of status, excepting the recent COVID waiver months. So you should get, the whole point of the waiver for direct loan borrowers with qualifying employment is that they should be getting credit for every month in which their federal loan was in active repayment status, regardless of whether they were on the right repayment plan.
Okay, Ashley, this may come from your resources, but this person is asking for instructions on how to consolidate into the direct loan program.
Okay, so what you'll want to do is, again, go to that federal student aid site, studentaid.gov, and you're going to log in. Right when you go to that front page, it's going to ask you to log in. If you haven't been there in a while, that's okay. It's nowadays it's the same login as your FAFSA, but you can register for an FSA ID and password real easily. And once you go in there, it's going to once you go into the consolidation application, it's going to automatically populate all of your loans. And then you go through the process. It's not any kind of credit check situation. So it's not like you're refinancing your loans. There's no interest incentive to do so. It's taking the weighted average of your underlying interest rates and rounding them up slightly to the nearest 1/8%. But it's a pretty straightforward process. If you have trouble, that's why I left the Access Connects slide up here. You can work with one of us on the team. We can absolutely help you through the process.
Okay, next question. How is this affected by the fact that those of us with federal loans will be getting a new servicer? So that's one question.
Do you want to take that one, Arwen?
Yeah, sure. It really shouldn't affect you. You will still be able to, to avail yourselves of the waiver opportunity. It's, things are a little bit up in the air right now with the department in terms of, I think this is probably reference to the fact that Fed loan servicing is planning an exit in the federal loan servicing space. But the waiver process will continue through the department and with its appointed PSLF servicer, whether that be Fed loan for a while longer or a new servicer in the future.
I was going to say it's not supposed to. It shouldn't affect it. I really hope it doesn't.
And I guess so the follow-up, which I think maybe you already answered, which was that this person has sent their employer certification in 2021 and federal loans hasn't responded that they've received it. So the question is whether they should get a new employment certification in and accepted before the new servicer. And that if that's too individual of a question, we can just request that person make an appointment, Ashley, to chat with you. So feel free to punt if you need to.
I would, unless Arwen has some other type of guidance.
Yeah, I mean, I think that, our general instruction to everyone would be if there's sort of any ambiguity as to whether or not, your employment is fully certified, that we would encourage you to put that in, including with Fed loan. I think it is, you may need to monitor it sort of in the future to make sure that it's that your employment is really registering in the system. But I do not think it hurts anyone to sort of over certify, if you will, their employment.
So this is another pretty specific question. This person was with Navient the first year out of school, and their PSLF was denied because this person didn't consolidate their loans with the federal government. And so the question is whether these changes would get this person credit for that time period, and that this person would need to submit the form for that period. Would that person need to submit the form for that period?
Arwen, do you know if the underlying loans will qualify?
Yeah, so I presume that the scenario here is the borrower had a FFEL loan. Again, one of these federal family education loan programs, and was told at some point your loan type is not eligible. But yes, that is like one of the main purposes here, presuming that's what we're talking about, is to give borrowers credit for months they spent on repayment on non-qualifying loan types, presuming that they had qualifying employment during those periods.
Okay. Another question is, do we have to submit PSLF for employers we know don't qualify?
I would say no.
Yeah.
Okay. So what if so this is another one related to what if the company was bought out? Will the new parent company be able to certify for those years?
I would think that the HR documents would transfer over. So I would believe so.
Okay. If anyone needs, by the way, clarification on their question, feel free to write in the chat. All right, so the question is, should we consolidate only the FFEL and submit the form separate from the form submitted for the direct, or would consolidation merge both?
This gets into kind of an interesting issue that, you know, unfortunately, in some ways, the waiver is so new that we don't have all the information that we might like to have about it. There's some, you know, there's some ambiguity in my mind about what will happen if you take all of your direct loans and your FFEL loans and consolidate them, in the sense that if they've been in repayment for different periods of time, in other words, if you have like an older loan and you've had qualifying employment that sort of dates back to an older date, it's possible that there may be some benefits to you in consolidating them all, in terms of sort of getting credit for that older employment. But we just don't have answers to that yet from the U.S. Department of Education. So unfortunately, like, I don't feel like we can really advise you as to whether or not to include your direct loans in the consolidation. Again, because it's just, you know, there's some conceivable scenario in which perhaps this could benefit you, and then there's other conceivable scenarios in which perhaps it might, you know, not be the ideal thing to do. So I'm sorry that we can't provide, I can't provide greater clarity on that at this point in time. Ashley, I don't know if you have a different take on that.
I don't, but what I'll say is that the good thing about PSLF is that it's a loan-based program. So you can qualify, and it's, so by loan-based, I mean, it's based on the individual loans you have and not you. So if you could be on multiple tracks for PSLF on each of your loans. So loan 1 could be, you have 8 years of eligible payments, and loan 2, you have 3 years of eligible payments, just based on when you borrowed them and where you were working. It's just a little bit more confusing on your part, and you have to be really good with paperwork. And if you're an attorney, I bet you are really good with paperwork. So if I were you, I would keep the direct loans separate and keep the FFEL loans, you know, you can consolidate them and just the FFEL loans, just to make sure that there's no mixing of the waters, to put it gently. Hopefully that makes sense.
Okay. Yeah, no, that this person is direct messaging me that their question is answered.
Okay.
So great. So you said that past ineligible loans may not be considered. Can you explain?
So that, I don't think that was our intent, just to say that. What we're trying to convey here is that loans that were previously ineligible for PSLF, federal loans that were previously ineligible for PSLF, largely what we mean by that is FFEL or Perkins loans, will effectively become eligible under the waiver if they are consolidated into the direct loan program by October 31st of 2022. Like the whole point of the waiver is to sort of allow you a pathway to get credit on these loan types that did not used to qualify, and for payments that you made under repayment plans that did not used to qualify.
And I think we all know this is as clear as mud at times. So that's why we're here to try to talk more about it. And we're using terms that might sound not completely intuitive. So those FFEL loans, those Perkins loans, those previously ineligible loans still are ineligible. But if you consolidate them, those payments you made could be eligible. Hopefully that's a little bit better.
Okay. Next question is, what type of document or record keeping would you suggest? This person has a spreadsheet with conversations, form submission dates with federal loan servicing, you think something like that is sufficient, or should they be doing more?
I'd say anything in writing that you've been given. Screenshots are super helpful. What else would you say, Arwen?
Yeah, especially the documents you've been sent. Make sure you keep those. But it sounds like you're quite on top of trying to keep a record of this.
I'm impressed.
All right, next question. How are maternity leaves under FMLA handled if you stay with the same agency before, during, and after your leave, and you make your student loan payments the whole time?
They are, FMLA leave is protected. So that is still considered full-time employment. So don't worry if you took off 3 months or 6 months, between two maternity leaves. If they were under FMLA, they will qualify. As long as you're working full-time before and after.
And your loans are in an active repayment status. Meaning not in forbearance, not in deferment, not in default.
All right, next question. Is there any sense as to how long it will take or is taking for direct loans to implement these new eligibility rules to payments that were previously deemed ineligible but are now not eligible? This person submitted all the forms about a month ago and has not received credit for those payments, and is continued to be sent denials.
Yeah, so you will, if you have ineligible payments under the traditional PSLF rules, your efforts to sort of apply for traditional PSLF will probably for the foreseeable future generate further denials. We have seen that the department is sending emails to people letting them know that they have updated payment counts under the limited waiver. But that process is expected to be ongoing, I believe, even potentially well past October 31 of 2022. So, they will be processing forgiveness under the limited waiver and updated payment counts under the limited waiver in batches on a rolling basis. October 31 of 2022 is the deadline to get your paperwork in, but it's my expectation, at least, the department will be probably processing some of this past that date.
And I just received a message from someone who said that they received an email that they're backlogged and doing their best to update everything. Okay. Next question is that one. If I have consolidated and submitted my PSLF and met all requirements, can I assume my loans will be forgiven?
It sounds like you can assume it as long as you meet those criteria we talked about. You consolidated into direct loan program, you were working full-time for an eligible employer, and were making payments. You were in active payment status.
Next question. I received an email from USDOE that said, based on our estimates and your records, your direct consolidation loans payment count for PSLF should go up by at least 36 qualifying payments. I take this to mean that they already know I have made payments while in a qualifying job, but that I was not in the right loan program.
Yeah, that's probably right. Either that you, I think at this point, it probably means that you were in the wrong repayment plan. But I suppose it's possible that you had the wrong loan type. My instinct would be that it was that you were in a wrong repayment plan or failing to meet other criteria for PSLF. Like in the past, if you paid a payment that was 1 penny short of what you were supposed to pay, it wouldn't count. And there, we've seen this chronically in the student loan assistance unit in the AG's office, just small little things. You pay your bill 16 days before the due date, it doesn't count. So there are just a sort of a myriad of reasons why payments were non-qualifying in the past. And again, here, since what they're looking at here is, were you in an active repayment status? They're not even bothering to rack up and analyze your individual payments. They're looking to see, do you have sort of qualifying employment on the one hand, and were you in active repayment on the other hand? So in your scenario, I would say what's important for you to do now is to make sure that you don't have any non-direct loans, and if so, get them into the direct loan program. And then secondly, make sure that you have all of your employment certified and on file, because the department only knows what you've told them about in terms of employment, and you want to make sure that it's all there to maximize any potential benefits under this waiver.
Okay, you may have already covered this, but there's two questions around this. Regarding federal family education loans, does that include subsidized and unsubsidized Stafford loans?
It can. It can. Again, just like Aaron said, let's be a broken record, go to studentaid.gov and see what's listed. And if it says subsidized and unsubsidized Stafford loan, but doesn't say direct, then it's pretty safe to assume they're FFEL, and you can consolidate them to become eligible. And again, as long as you met all the other criteria that you were working full-time for an eligible employer and making payments.
So Ashley, put another way, subsidized Stafford loans can exist in the direct loan subsidized loans can exist, and unsubsidized loans can exist both in the direct loan program and in the FFEL program. So it doesn't necessarily tell us, without you going in and checking for that FFEL or direct word.
They did exist at the same time. So though it's in FFEL's history now, it wasn't at one time.
Yeah. One thing that may be helpful to folks is that the FFEL program, I believe the last FFEL loans were made prior to July 1 of 2010. So any loan that you took out, including a consolidation loan after July 1 of 2010, provided that we're talking about a federal loan, is a direct loan in all likelihood.
And then a follow-up question is does that loan need to be consolidated?
The FFEL loan, absolutely.
The FFEL, yeah.
Yes, the FFEL loan, that is the name of the game here. It is going to be probably the biggest issue is making sure that FFEL borrowers get themselves into the direct loan program before October 31 of 2022. And then everyone else, make sure your employment is fully certified, going all the way back to October 1, 2007, the start date of the PSLF program. You don't have to have employment going back to October 1 of 2007. And in fact, you can have employment that starts and goes. You could have come in and out of public service. Your 120 months do not need to be consecutive, but you want to make sure that you're fully certifying as much of your public service employment as you possibly have that began after October 1 of 2007.
Okay, and here, this is another one that you may have touched on. So someone's asking about whether the payments that they made to Sallie Mae or Navient and others prior to moving it to direct loans, will those be eligible for the credit offered until 10/31/2022?
Provided that they were made after the start of the PSLF program, in other words, after October 1 of 2007, they should.
Great. All right. So I am not aware of this acronym, but MOHELA and other entities. Okay, thank you. Have been my loan servicer, but that just means they're contracted by the DOE, correct? Is that correct?
Yes. Yeah. As long as you have ensured that you have federal student loans. They can have their own private loan programs too. That was the big confusion with Sallie Mae and Navient or Nelnet. They had both types of student loans. So again, go to studentaid.gov, verify that they're federal loans, and then you are safe to assume that MOHELA and any other entity that Granite State or whoever it is your servicer. They're the ones who are billing you on behalf of the Department of Education. Because the Department of Education doesn't want to be a lender. That's not their intention, but they're just trying to provide accessibility to your higher education.
Okay, and here's just a repeat. Can you repeat what you said about the impact of COVID payment pause? Will these months still count towards the 120 payments, even if no payments were made?
Yes, as long as you were working full-time for an eligible organization.
And I don't know if this is a question about PSLF in general or the waiver, but the question is, does this program apply to persons who have joint loans with their spouse?
I hate hearing spousal loans.
You know, I would say, yeah, we've been told to bring those examples to federal student aid. So if you're in that boat, I guess I would ask that maybe you get in touch with Heidi and she can put you in touch with me, and we can try to escalate that to federal student aid. We've got a couple of cases out there pending now. We're not sure of the outcome, but we have been asked to raise it to their attention, and so it's to be determined.
Access Connects is not going to be your best resource for that one. That's going to be a complicated one.
You can anyone who needs help can go to the Attorney General's website. It's mass.gov/AGO/student loans and file a help request directly with us if they're in that bucket, or if they need help, you know, generally with questions about the waiver. You know, so we're an additional resource.
Okay, and I'll make sure to put that in the chat, and then we'll also follow up with resources via email. So what if someone had a period of active payments, but also a deferment or even a delinquency? Will they be disqualified altogether, or will the active payments still count?
So yeah, the period of deferment will not count. Delinquency will not matter.
Okay, so another question. I've recently gotten married and changing my last name. Will this cause confusion with my loans and eligible payments?
It shouldn't. It should be tied to your social security number. I wouldn't, that is not something I would really worry about.
Okay, next question. Does one have to file taxes separate from their spouse to exclude their income from IDR?
Yes. The only exception to that is revised pay as you earn. Repay will not allow you to do that. I will, and I talk to this subject all the time with borrowers. Just make sure you're working with an accountant too, to make sure that you're not losing more in tax benefits over the years than you are gaining in income driven and PSLF benefits. Many times lawyers, they're borrowing 160,000+, so it will work out, but just make sure that you check in on that.
Okay. If past loans that were not direct loans and were in an IDR, do they qualify for the limited waiver? We've already answered this.
Yes, they should. Again, you know, if you had a FEL or a Perkins loan in the past, as long as you take steps to bring it into the direct loan program or have already done so, and you know, you certify your employment, those payments should count, or those months in repayment, I should say, should count.
Okay. Is it possible to be refunded for payments made in excess of the qualified payments required for forgiveness?
So yes, so basically the instructions are that once you hit the 120 mark of eligible payments, you need to keep making payments until you're actually granted forgiveness, and you will receive a refund of anything extra that was given to you. Or I'm sorry, anything extra that you paid.
Okay. Another question, if payments become due again in January, should we make payments while we wait for the Department of Education to get around to implementing their rules?
This for me is another area where we don't have complete clarity as to how the waiver would work. I would say, you know, if you're not going to be at 120 payments, I would at this point, I would err on the side of caution and try to make sure that I'm making payments that qualify under the traditional PSLF rules. some people, if you're very confident that you're going to have 120 payments, maybe you're willing to take the chance and put it in forbearance. But I would be cautious about doing anything other than paying under the traditional PSLF rules for future payments.
Okay, so we have a follow-up on the FMLA, and this person was under the impression that that time would not qualify because they're not actively working, because the time off under the new FMLA doesn't count towards retirement, accrued time, or loan forgiveness. So I think you've already answered this, but I don't know, any clarification or resources?
FMLA is protected and called out. So don't remember that regulations across different organizations of the government aren't necessarily tied together. So though FMLA time may not count for some things, it can count for other things. So in this instance, it will count for PSLF months.
All right. Any advice for unresponsiveness from Fed loan servicing regarding a PSLF employer certification? And I think we've talked a little bit about this. This person sent one years ago where they tried to explain that they were part-time and then went back to full-time. Any thoughts on that?
If it's been that long, I would suggest filing a new form, clearly delineating the period of full-time employment. Like you don't want to have a messy form that's trying to say I was part-time for this time and full-time for that time. You just want a clean form identifying the exact time period of your full-time employment. So I would suggest resubmitting. And if you have trouble, again, you could reach out to our office and we could try to follow up with Fed Loan.
All right, and another question we have is on the USAID website. This person can see how many payments they've been given credit for, but cannot seem to find where the certifications of being in a qualified job are. It should show the extra payments being in the wrong repayment type. Can you direct this person to the right place?
I have a feeling, are you on your Fed Loan website as opposed to your My Fed Loan website? As opposed to studentaid.gov?
I'm in studentaid.gov.
You are, okay.
I just can't, I just keep seeing things I learn about the program. So I just keep getting, as opposed to like, this is where, like, I think I recertify, I think I have jobs before that, before.
Yeah.
I can't find it.
Yeah, I don't think that you cannot, this is a little bit of the conundrum and why we're saying like,
All right, I'll just
certify, because there's not necessarily going to be a clear, easy way for you to see all of your employment certifications, particularly if you've had a wrong loan type in the past. If you had a wrong loan type in the past, you submit an employer certification, like odds are it's sort of in the bowels of Fed Loan servicing system somewhere, perhaps. But your employment certifications should go to Fed Loan, and they are the entity to talk to about how much, what certifications you currently have on file.
okay.
You will not be able to see that through your studentaid.gov account, but I would, yeah, you should be able to inquire directly with Fed Loan as to, what time periods you have certifications on file for.
Thank you.
Okay, I do not see any more questions in the chat, and I see that it's 4 o'clock, and I know people will begin to drop off. Yes, amazing time. And so I just want to, I really, really want to thank Ashley and Arwen for their time. I am so glad that you are both experts on this and I am not, but that we have you here to reach out to. So, for everyone who's on here, I mean, you can tell, what a wealth of information both Ashley and Arwen are. And they've provided you with 2 resources, and we'll follow up. So both with the AGO and also with Access Lex. And these are, opportunities for you to actually receive some coaching one-on-one and answer your particular questions. So I would highly recommend following up and looking at the resources that they provide. So we will send around a recording of this program in case you missed anything. And in addition, the resources. So Ashley and Arwen, thank you again for being here today.
Very welcome.
you, Heidi.
Happy to chat with anyone in the future as well. Just want to make sure everybody can take advantage.
Yeah, it's a great opportunity. So, pay attention, do what you need to do. We're really excited about it. We think hundreds of thousands of people are going to get relief, provided that they jump through all the right hoops. So
I've been a
Great.
betting woman for a few years, saying that 2024 is the year where everyone's going to start getting forgiveness, but I'm going to lose because it's going to be 2022.
All right. Well, let's hope. That's optimistic.
Yeah.
So thank you. Let's end on that note.
Thanks
all
for
right.
putting
Thanks
together,
everyone.
Heidi.
Have a good night.
thank you.